Guys, welcome back to my channel. In today's video, I'm going to go through a live trade with you guys that I took on SPX this past week. So I traded this. It was a trend line break on SPX, so I think it's a really good example to show you guys. I did get stuck in a pullback as well, but it pulled back right to its trend line. So I think it's a really good example to kind of show you guys not only the trend line break. The trend line was on a higher time frame. However, I was able to day trade and scalp it, and then it did pull back, and it pulled back and retested that trend line as well. So I think it's really a high probability setup to go through with you guys, and I live recorded it and I called it out on my Discord, so I'll go ahead and go through it with you guys and kind of my mindset and emotions while I was in the trade as well. And I actually scaled out of this trade, so again, I think it's another great example of how you can potentially scale out of your trades. As always, don't forget to hit that like button and subscribe to my channel, and let's go ahead and get started. Okay, so let's go ahead and get started. So this was a trade that I took on 11/23, which was, I think, last Tuesday. And I took it with SPX, and I was actually watching SPX's trend line break here on the daily and 4-hour time frame. SPX has a strong trend line to the upside, so it has touched it multiple times here. Remember what we said, on a higher time frame, you get a 3-touch trend line to actually make it a high probability setup. We have 1, 2, 3. Right now, it's on its 4th touch. If it's able to hold above this trend line, we could see some bullish momentum. So that was really what I was watching today on a smaller time frame, in order for it to break the trend line for me to be able to scalp it. So that being said, I really like looking at the Discord, because I can see exactly where I called and like what I was thinking. So because I type all my thoughts out in the Discord. So I entered SPX calls once I started to see it hold above that trend line in the 40-10 level. So a break of the 40-10 level and a hold above the 40-10 and my trend line was my entry. That's when I entered it. Stop loss was, again, the break below, back below the 40-10 level. So I'm going to go ahead and show you guys the live recording. It did end up making a decent move up. And you can see here when it did break the trend line, it came back, retested the trend line, and then continued back up. So really high probability trend line break here. Even though the trend line was on the daily and 4-hour time frame, I was able to hone in on a smaller time frame and be able to still capitalize on that break. And I made around $8,000 on this play posted in the Discord. So let's go ahead and take a look at the recording. Actually, let's look at SPX first. So I'm going to go to SPX. Okay, so I just want to show you guys the daily trend line here. So this is the trend line on SPX here. So as you can see, this is the trend line on SPX. ES also has that same daily trend line here. Actually, ES is approaching the trend line, sits around 40-40 and 40-50 level. So if it is able to break above that 40-50 level, ES will also get above its daily trend line. So I'm just going to go ahead and show you guys what I was looking at. So my initial level for entry on SPX was a break above 40-10. That's also where kind of my trend line laid as well on the smaller time frame. So I was comfortable making that my initial level for entry. At the same time, you can see here on ES was trading above. So ES futures were trading above its VWAP level. I've mentioned this before. I like to trade calls if futures are trading above their VWAP levels. If they're trading below their VWAP levels, I will not look to play the upside. So you can see here at 9:30, ES started to break above its VWAP and had a nice trend up all the way until it hit its level of resistance at around 40-40, which is what helped SPX gain the momentum it needed to be able to break that 40-10 level and make a small move up. Now you can see here that overall of the day, it wasn't a strong bullish move up. There was a lot of retests here, retests to the trend line and continuation up. So it wasn't a strong bullish move, and I do want to just say over the past couple of weeks, market hasn't really been giving a strong direction to the upside or downside. You really have to be able to hone in on a specific high probability strategy, bounce plays, retest levels, to actually be able to take high probability setups and capitalize on the momentum. There hasn't been a lot of volume. Obviously, with Thanksgiving week, there was low volume, and then the week before that as well with the Fed announcement. So a lot going on in the past couple of weeks. So really not a lot of strong direction. I think we'll start to see more direction in the market, more cleaner price action towards the end of the year and into the new year. I don't think that we'll end up seeing any clean price action over the next several weeks. It's just my personal opinion, but I know that this past month has been a difficult month to trade, even for myself. I have taken a lot of red days. I do post my red days on Instagram, so not every day has been a great day for me. However, I have been profitable over the weeks. It just has been difficult to trade. So if you are struggling in the current market conditions, don't stress. Everyone, it's not clean price action at all. So if you are able to even come out profitable over what has been the past month in November, then you are going to be all set when we do get really good price action. So let's go ahead and look at the video here. It's just SPX here around 936. Remember, my entry level was the 4010 break on SPX. I don't remember exactly when I entered here. I think it was around 937. So we got about 20 seconds left to the 937 candle. All right, SPX is starting to pull towards that 4010 level. I want to see if we're able to hold. I think I entered this towards the end of the 937 candle as it starts to break above 4010 into that 4011. And the strike that I selected was the 4010 strike. So you can see here, enter SPX calls here. 4010 strike was the strike that I selected. It was the at the money strike. I usually am always trading at the money or very slightly in the money on SPX. Usually it's at the money. My fill price on this was $14.20. I filled in at 937.24. And I had 15 contracts on this. And if we go ahead and take a look here, so this was the 937 candle here, our 937 candle, 2-minute candle here. It started to pull up above 4010 on the 1-minute time frame. So all of my entries usually occur on the 1-minute time frame, and then I monitor my trades on the 2 and 5-minute time frames. We go ahead and take a look here. The 937 candle here had opened above the 4010 level. It just was struggling to hold. Like I said, over the past couple of weeks, we haven't had clean price action. So you have to really look at higher time frames. Or personally, what I have liked is entering on the 2-minute time frame and not entering on the 1-minute time frame, because you're less likely to get faked out on the 2-minute time frame versus the 1-minute time frame. I did enter at 937. I should have waited for the 938 candle, because on the 938 candle, on the 2-minute candle as well, I had held above that 4010 level. So as a higher probability entry to enter on the 938 candle, I think I just got a little bit antsy. Emotions took over there, but you can see the 938 candle was a stronger bullish candle here on SPX. Entered at 937. When I did enter, you can see here, this is where the trend line lays on the daily time frame. It did reject that trend line, pulled back. However, when it pulled back to that 9 EMA. My stop loss on this was a hold below 4010 on the 2-minute time frame or 5-minute time frame, depending on what I see with futures. If you look at ES futures here, when I did enter SPX, it did pull back here on the 5-minute time frame, but overall the 5-minute time frame was still holding the 9 EMA, trending above both EMAs and its VWAP here, strong bullish momentum. And on that pullback candle, volume did drop. So when volume drops on a red candle or a pullback candle, that signifies that it is a pullback and not a strong reversal. So when this pulled back, never held below my stop of 4010. You can see here, held that 4010 level on the 2-minute time frame prior to continuing back up. So rejection makes sense. It rejected right where right where my trend line is. Rejected here, pulled back. However, my stop was set pretty well. Even though it was a pretty tight stop, I usually set it at the previous level of support or resistance. I wasn't willing to risk it on a day like this, especially since it was a slow week in the market. We had Thursday off and Friday we had a half day. So there was overall low volume in the market. So I wanted to set tighter stops. Set my stop at 4010, never held below 4010, never broke below the 9 EMA, still held the trend up, and you can see it made a nice move up. So I don't remember exactly where I exited this, but let's go ahead and take a look at the video. So my profit targets to the upside were 40.22 on ES. So the next level of resistance that I had on ES was 40.25, 40.22 and 40.25 on ES. And you can see here my first profit target is 40.22 on ES, which is the pre-market high. 40.22 was the pre-market high on ES, which is why I had set that as my first profit target on SPX. So if ES touched 40.22, I would lock some of my position on SPX. 40.20 and 40.25 were my targets on SPX. So if we go ahead and take a look at the video here, it's around 942. We can see that the pullback happened here. And we're going to continue. Forward some of this. Okay, here's when the premium spiked. So the pullback happened here. This is 944. And right here on that 944 candle, you will see the premium spike. So it was down around $1,000. The good thing about the pullback is the premium was holding. There wasn't a lot of volatility. IV was a little bit lower, so the premium was really holding well on that pullback. And you can see the huge spike in the premium. The premium actually spiked all the way to $24 on that candle. The problem is the candle moved so fast. I wasn't able to react fast enough to be able to exit. A lot of the students, I was able to call out the exit for them, and they got out on the top of that premium spike, which you guys can see spiked all the way to $24. And then if we look at the candle here, you can see candle made a huge move up, wicked back down right to where that trend line is. This trend line is a very strong trend line here. But if you were able to get, I did call out to get out of the top of the wick. I was not able to get filled out of the top of the wick, and I just wasn't able to react fast enough to be able to get filled out at the top of the wick. But when the wick did pull back to that trend line, the next candle opened above that trend line and still was able to make the move up. I exited on one of these two candles. I started to scale out. Premium still held really well on the scale out. So even though I missed the initial spike, premium did increase. So let's go ahead and see where I exited some of this. So you can see here on this spike, so this was the premium spike here, on that candle went from $15 or $14 all the way to $24. So it was a huge premium spike. So if you were able to get out of the top of that premium, was like an amazing exit there. But you can see as the stock pulled back, as it wicked back down, it still held really well, and that's where I actually started to scale out as the stock ended up making the move up. And you can see here on the next 2-minute candle held really well before it ended up making the move up, and I just slowly started to scale out of my position. So this is around 948 here. And premium starts to spike back up, and I exit some of my position here. So I exited some of my position here. I exited 10 contracts. So I had 15. I exited most of my position here at 948, exited 10 contracts. And if we look at the 948 candle, it is this candle here did spike right back up to my 40-20 profit target. So I didn't get scared and exit this as it wicked back down. I waited for the next candle to open. This wicked back down to the trend line. The next candle opened above the trend line. Still waited. Strong bullish momentum on the 2-minute time frame. You can see here this candle has a strong bullish move, and then this candle opens above the previous candle. Again, strong bullish move. So I waited to the top of this candle wick here, and I ended up exiting at the top, exiting not 80% of my profit on the top of this candle. It went back up to my profit target of 40.22. And if we look at 948 on ES here, again, 948 candle here, it was way past the 40.22 profit target, and SPX also hit my 40.20 profit target. So I was comfortable exiting most of my position there at my first profit target and scaling out. The premium went from $14.20 to $18.80. And then I just gradually continued to scale out. So let's go ahead and look at where my second exit was here. Oh, here we go. So you can see here, premium still holding really well at each pullback candle. Premium was holding really well. IV wasn't that high, so I think that's why the premium wasn't fluctuating as much. Also, when you're trading SPX 0 DTE in the beginning of the day, so there's my second exit here. When you're trading SPX 0 DTE in the beginning of the day, usually the premiums aren't as volatile. It still has time before theta starts to really pick up. Usually on SPX contracts, theta starts to pick up towards the last probably 2 hours of the market, especially the last hour of market. SPX contracts tend to be very, very volatile. So if you're a newer trader, I definitely don't recommend trading it towards the last 2 hours of the market open. In the beginning of the market, it doesn't tend to be as volatile, which is why you can see on those pullbacks and rejections, the premium held really well. So my second exit on this position was $9.51. The premium ended up going to $20.30. So I exited some more. I'm now in profit. It looks like around $7,600. And then I just had 2 runners left on SPX that I ended up exiting. I don't think it shows on this video where I exited the 2 runners, but I think I held the runners pretty late into the day. Let's see. I'm into runners here on SPX. I think I exited those runners at this spike. So it's 10:06 here. Let's see. The premium's at around $22 here, and I'm still in just 2 contracts left on SPX. So I usually scale 80 to 90% of my position and then hold maybe 1 or 2 runners. If the stock continues to make a move up, those will just be my runners, and I keep increasing my stop on it. And there you go. I exited my last 2 runners on SPX at 10:07. The premium went to $21.70. I ended up making a total profit of $7,892. You can see here as I continue to scale out of my position as well. And that was my profit on it there. And you can see here, so my exits were 9:48, 9:51, and 10:07. You go ahead and take a look. So 9:48 was this candle here. 9:51 was towards the end of this candle here. And then we did get a pullback here. However, if we look at when I hold my runners, I don't watch my runners on the 2-minute time frame. I watch my runners on the 5-minute time frame because I don't think the 2-minute is going to be helpful if you're holding runners, because usually runners you just keep until your final profit target. For me, it was 40.30 on SPX, so I was comfortable just holding it. And if we look at the 5-minute time frame, you can see the 9 EMA held on SPX on the 5-minute time frame all the way through. Really no reason for you to exit. We did get some pullbacks here, but overall premium value held pretty well. I was still break even throughout the entire hold on those 2 runners. So usually I tend to lock my runners at my stop loss as I'm increasing my stop loss, or if it breaks the 9 or 21 EMA and I start to see a reversal, usually I let my runners go to break even. I don't like to be down on the runners. And if you are holding runners, you should only be scaling out or holding runners if you have at least 5 to 7 contracts in SPX. Other than that, I don't recommend holding runners. I would just lock your position and then re-enter. So I exited on the spike of this candle here. So my exit was 10:07, and it was the spike of this candle close to the 40.25, 40.30-ish level. And if we look at SES here, this is the 10:05 candle here as well. Got close to its 40.30 level, so I was comfortable exiting on the spike of this candle here at 10:07. All 3 of my targets hit on this position, so I was comfortable exiting the entire position here. This is a really great example of, I went through how to draw trend lines, how to play trend lines. This is a really great example of a break of a trend line and a break of a level of resistance. ES trending above its EMAs and VWAP. This was a very high probability setup in a very, very low volume week. So this is what I mean when you're having weeks where it's low volume or not a lot of movement, or the market is anticipating some type of news. These are the type of plays that you want to look out. There's multiple strategies in this one specific example. And even on the 2-minute time frame, when we did get those pullbacks and we got those rejections, it was still rejecting and pulling back to significant levels. And if we look here, rejected the trend line, pulled back to 40.10 and then 9 EMA. Right here, when it came back, pulled back to the trend line, held the trend line. Even on this pullback here and rejection, pulled back to that the trend line, and the 21 EMA held and then continued its way up. So all of the indicators that I use, all the trend lines that I use, they're very high probability indicators. They're not something that, you need to put a lot of effort into understanding the indicator. It's a trend line. The EMAs are trend lines. They're very significant levels of support and resistance sometimes on the stock. So this is why I use specifically these technical indicators, because I have found that they are the highest probability in whatever strategy that you're implementing, whether it's bounce plays, whether it's trend line breaks, whether it's reversals. These are the highest probability indicators that you can use. All right, guys, so that's it for today's video. Thank you so much for watching. If you have any questions, comments, or concerns, or any video suggestions that you would like to see, go ahead and comment them down below. All of my social media sites are also linked down below, so make sure you check that out. And I will see you guys in the next video. Bye.